Looks like the stock is now trading off, maybe a little bit of buy the rumor, sell the news, maybe some investors taking profit. But give us the overview on your earnings report.
Yeah, we had a very strong earnings coming off of a year ago growth where we were up 25%. So on a 2-year basis, we've grown, nearly 29%. We have in the last 12 years, we have a 12% CAGR in growth rate. Our profitability continues to be strong. We have some of the leading margins in food and growing faster than most. We're a premier snacking company. So we have a really good track record of sustainable, profitable growth. Q1 was another one of those. And we're off to a great start of the year and anticipate it to be another strong year, especially as we get to the back half of the year, lap the pricing that we implemented last year, and really see our new innovation, our advertising get traction. So I'm really pleased with the results of the team, both on the top line and on the EBITDA line as we continue to grow both top and bottom line profitability.
I want to ask about the Twinkie, and it's in the ticker, by the way, TWNK is the ticker. Is the Twinkie, if I taste it again, going to be the same as the Twinkie I had as a kid?
It's going to be better. There's a perception out around Twinkies. I encourage everybody who's listening to go out and try it. And I think our experience is when we've reintroduced consumers through all of our products, including Twinkies, cupcakes, some of our icons, or reintroduce them to the franchise with new items like Casbars, we always taste better than what they expect. And they typically come back for more and buy us at a greater rate than the category when they repeat. We've invested a lot in our product quality. It's important to us, and we realize that consumers universally love baked goods, and to be able to bring them a snacking version at scale in contemporary forms and the quality that they expect is the secret sauce to our sustainable growth model.
And even though you guys have been around for a long time, there is that misconception that Twinkies stay on the store shelf for a long time. I think I've heard you say it's basically capped out at about a month. But you did talk about innovation, and you've got some product behind you. You had Bouncers, I think, last year. You just rolled out Casbars. Okay, there's a look. What is it about these products that are gonna win more consumers over than, say, the Twinkie lovers?
Well, you combined what Hostess fundamentally does great, which is moist, high-quality cake, do it at scale, so we have accessibility to all consumers, and put it in a contemporary form. And in the case of Casbars, it's multi-layered, it's got cake, it's got candy crunch, it's in a form that consumers are used to having. And when you combine the great brand and the high-quality cake, multi-layered indulgence in a 2-bite, smaller snackable form for our retail channel or a larger version for C-store, consumers want to try. And when they try and they realize how good it is, they come back for more. Now, remember, we also compete in a broader $65 billion indulgent snacking market. So when you put it in a more contemporary form and the size they want and combine those, you make it more available and more accessible and more interesting to a broader consumer market. That's what drives our growth.
So that's the innovation side, but obviously we've talked already today about the CPI numbers, the inflation reality for a lot of consumers. Pricing on higher priced product to anybody right now is a complicated thing. How are you navigating inflation?
Yeah, inflation's hit us like everybody else. And, if you look at last year, our Q4 inflation was up 20%. This last quarter is about 13.7. We have needed to price, and meaningfully. We price as a last resort to protect our gross margins so that we can continue to invest, pay our team, invest in our innovation and our marketing, and bring these great products to consumers that they love and bring them the moments of joy that we aspire to become. So we did our last pricing, however, in July of last year. So we will be lapping of all of that pricing as we move through Q2. And we don't plan another pricing action now. We expect our inflation for the full year to be high single digits this year. And last year, if you recall, we were in the high teens. So we're still in an inflationary market. We're not planning on passing any of those prices. Now, that could change, but passing those prices on to consumers at this point.
Andy, thanks so much for joining us.